Yeah, Mr. Ashish.
Yes.
Yes, I'm saying, can we quickly tackle that question you had earlier on? Were you able to watch those two videos?
Uh, no, bro, not yet because I was out. So I am planning to watch right now after this because I just opened my laptop and messaged you.
Yeah.
Those two videos of what we say, silver bullet, right?
Yes, the silver bullet. And then what's that other one? Which videos?
Which one is another one?
So I'm only referenced one video there.
Silver bullet. I came to know that three times are there: 3 to 4 UK, 10 to 11 US, then 2 to 3 US. Three times silver bullets can happen per day, right?
Yes, it happened 3 times a day. So you can have 3 trades a day. Only if you
Yes.
understand the things that we look for. So it clears
So
all
what we
the
look like in
bad.
in in silver bullet time zone, we see that it should sweep on liquidity and then market structure shift with us imbalance, a fair value gap, and then we enter into fair value gap, right?
Yes, but you must look for what type of liquidity are you looking for? Like there is another one that states clearly. What does it call it? What is his name? Sia?
Name 4, sorry.
That one where you look for Asian high, Asian low, London high, London low.
Yeah, so basically,
Is it
silver.
one?
Yes.
Is it one? Just want the name of that video.
The one trade setup.
Yeah, you must also watch the one trade setup. It explains to you what liquidity do you look for when you take trades using that silver bullet model.
Mhm.
So you look for that one trade. What do you call it?
The one trade setup for life.
One trade setup for life. Is there that video? It shows you the type of liquidity that you look for, and then you go and watch the other one, the silver bullet. Those two videos, you are done, man. You are done. Don't need anything.
Silver bullet, how many videos are there? One or two?
Just watch this one there.
1, 2. We got one for silver bullet and then the evolving silver bullet.
Okay.
Yeah, but mainly liquidity, the liquidity that we pay much attention to during the silver bullet time, the framework of many ICT silver bullet setups are as follows. You can write this down.
We'll send them the
Yes.
screenshots.
You just look at one previous day's high or low as your drawn liquidity. Second,
Okay, 1 second.
okay. I'm just gonna send this to you on WhatsApp.
Okay.
How about that? Let me just send this to you on WhatsApp. Okay. Let me send it right now.
Okay, previous day high low, previous session high low, week high low, return to old, new week opening gap, expansion away from new week opening gap, Classic ICT OTE Conference of 2022 ICT of YouTube model. Okay.
Yes. Yeah, but yeah, if you want to go back and backtest it with you live right now, we can do that.
Yes, please.
All right, let's do it. So I'm just gonna go. We're just gonna start by backtesting Friday's silver bullets, and then we let's go to Nasdaq, and then we will also have USDT, yeah, and then
So these
I'll open another Nasdaq
we
chart. We'll have both USDT.
we should see for silver bullet in indices also, right? Indices also only.
No, every asset class,
It's
Any
not
pair?
all asset class.
all asset classes, bro.
Okay.
Yeah. Yeah, so we have okay, let me just delete these lines here. So let's say you wanted to trade silver bullets on Friday. This is what we know. This is what we normally do, né? Okay, let me just hide this thing here. So we have this day, right? And you have this day. These are period separators. This is Friday, Thursday, Wednesday, and this is Monday. We had a holiday on Monday, so nothing really happened. Was it on Monday? I think it was on Monday.
Can check.
Yeah. But this is Monday. This was Tuesday. Tuesday, the holiday was on Tuesday. This is Monday. So Monday, what you want to do is you have to highlight your new week opening gap if there is any. So what's a new week opening gap? It's Friday's closing price. If the candle is bullish on a Friday, you take the high of it, and then you take the closing, not the high of the week, the closing. And in this one, we opened with a bullish candle. So the opening price on Monday was somewhere here. So this is your current new week opening gap high. And you have your current new week opening gap low, which you can also call it buy side imbalance, sell side inefficiency, right? And you also have this buy side imbalance, sell side inefficiency, and then in the middle, you have this consequent encouragement, right? This is your
Right.
weekly. This acts as a magnet throughout the week. It's your weekly fair value. So I'm just gonna use the dotted lines and just say this is the consequent encouragement of this week. So let's say you wanted to trade the silver bullet on Friday. Let's start off with this one on Friday, then we just go back. Or we can start off with this one, eh? Let's look for it on Thursday. Or let's start with Friday. So that will be quick. Let's go to 5 minutes. So the first thing you do is you highlight your 8:30. 8:30. Why 8:30? Because normally at 8:30 there are news releases, so price will be volatile. So you want to highlight your 8:30. So there will be a Judas swing at 8:30 when those news if there are news at that time, and then you highlight your 9:30. 9:30, or 9:30, because 9:30 is the equities markets open. So at 8 and 9:30, you also want to highlight your opening price.
I wanna ask you one question. Like, what is the difference between 8:30 opening and 9:30 opening? What is 9:30 opening is equity market, and what is 8:30 opening?
News release.
Okay, but why gold always like start moving at 8:30?
At 8:30.
Yes.
It starts moving at 8:30.
Yes. Because
No,
of news.
No, 8:30. At 8:30 there's a Judas swing, but most of the most important thing at 8:30 is the news releases. Most of the time they release around that time.
Okay.
Yeah, that's the significance of it. So these are your times. Now you want to trade this is your silver bullet window, 10 to 11. The entry is mostly found during this time window, okay? And then you have,
right.
you also have highs and lows before 8:30, right? Remember you had London kill zone, yeah. London open kill zone, which starts at 2
to 5, yes.
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 2 to 5, you highlight your high and your low there. That's your London low, right? You just extend that. So just say London low. That's your sell side liquidity. You can say London sell side, London sell side liquidity. And then you highlight the lows and the highs before 8:30. You had this high, right? Before 8:30. And you also had those highs, I think Asian high, right? Asian high starts at 8 to 12.
Yes.
They're roughly equivalent, so we can just take
that
drop there.
Yeah, they are roughly equivalent.
7 to, I think Asian is 7 to 12, right?
Sorry? I'm using
Asian is 7 to 12 or 8 to 12?
No, it's 8.
Okay.
So London high was already taken out here. So the liquidity was this sell side and the lows that we created here. If you can see. London lunch hour. I had one guy call this period London lunch hour. One is this student. So we had these lows here, bottom, where's bottom? So you highlight, and then when we open, it could be at 8:30. You're gonna run on stops. You're gonna run on stops, yes. And then after that, we target the opposite side liquidity. So here we ran up, we traded inside the new week opening gap, we rejected just almost at the CE, if not at the CE. And we took out these highs here. We had relative equal highs from Friday. And if you're looking at the time these highs were created, this is wait 5 o'clock. Okay, I want to highlight London 2 2 to 5 is here. So we had relative equal highs from London high, right?
Mm-hmm.
These are relative equal highs here. From yesterday's London high. So we went up there because they were never taken out. So we had liquidity resting above yesterday's London high. So we took that out. We traded inside the weekly fair value gap, which is a current new week opening gap. And then we rejected at off of that CE. And then from here, you can look for a setup to take it down because you have these lows that are not taken. Then you can take a profit. You can go to 1 minute. Basically, I call it an early silver bullet. If you can get a setup to take this thing down here, this could be your low hanging fruit. We are still waiting for the opening and the Judas swing for 9:30. Right?
Mm-hmm.
Unfortunately, there was no setup for us to take it down here. We just melted back. But if you could, this was a good fair value gap to take it down from. And put your stop loss just above the mean threshold of this. Target these lows here. Bang. This is an early silver bullet, but this is not what we are here to teach you. We are here to teach you that about the silver bullet which is a fair value gap that usually opens during this time window to target whichever liquidity that has not been violated at the time. So because we are still waiting for this open at 9:30, this is also our liquidity. As soon as you open this high here, this is an 8:30 high, you're going to highlight that as your liquidity at 9:30. We might go up and run on this high before we target sell side here. So whichever we're going to target first, you are going to look for an entry to enter either up here after taking this one out, and we target these lows here. If we opened and then we went up to take this one out. But in this case, that was not the case. But at this time window, between 8:30 and 9:30, we made a high and we made a low. So this is new generated liquidity because these lows were taken out here. Let's assume that you didn't see this trade here. You're still waiting for your silver bullet time window, right? So I'm just gonna say this is silver bullet time window. So we are just trading liquidity inside these sessions, right? Basically, that's what, because you have a draw in terms of new week opening gap. If you are looking at this new week opening gap throughout the week, yes, we have traded inside, but no. This new week opening gap is still magnetic because this thing, I think it
lasts for weeks.
It lasts for like 4 weeks.
No, for weeks. It's not a one-day event.
It's not enough. No, it didn't. So I think it lasts for 4 weeks. You can go back as 4 weeks from now. All the new week opening gaps from the previous weeks are still effective. You might find that maybe here we turned at the new week opening gap. So this is still a draw on liquidity. It still acts as draw on liquidity. So we're gonna trade through it multiple times. Just look at how price respects it here. Here as a resistance, came back here as a support. Again, from the bottom, it's a support again and again and again. So we're just painting inside this range, trying to fill every void here. Okay. So at 9:30, we created a high, and then we created a low, 8:30, sorry. I call this an 8:30 high and an 8:30 low. Any low that's created between 8:30 and 9:30. So when we open at 9:30, you want to see which side did we target first, the 8:30 high or the 8:30 low. So this is going to be 8:30 low, sell side liquidity. Let's go back to 1 minute. So we opened at 9, we went up to completely fill this fair value gap here. We colored inside that fair value gap multiple times up and down. Then this was time distortion. We were waiting for this time window, right? So that you can get an entry to whichever side. If we colored inside here, went up to take this high, we're going to get an entry to take here, to take it down here. But in this case, we colored inside here and then we took sell side, which was an 830 low. I call it an 830 low. Any low that was created between 830 and 930, I call it an 830 low. So we colored inside this fair value gap, distributed low, we took it out, we made an SMT divergence with US 30 because US 30 took out this London low. So that was a sign to say Nasdaq has no willingness to go lower. So I'm just gonna write SMT here.
With S&P 500.
SMT with ES and US 30. So I'm just gonna say N. What is US 30? YM, right? So it did an SMT with ES because ES they went lower, but it couldn't reach for London low. So this is an SMT here, right? They went lower, but Nasdaq didn't go lower than this. And then after that, it created a market structure shift here, and it created the fair value gap. The first fair value gap after liquidity has been purged was here. And this is our silver bullet to take it up there.
So without market structure shift, we can enter if after liquidity it is giving us a
Sorry, I can't hear you.
I'm saying like here we after it's sweeping the 830, it's giving us a fair value gap, but this is not a clear market structure shift, right? But still without market structure shift we can get into get entry in what we say fair value gap, right?
I can't hear you properly. You said there was no clear market structure shift over here.
No, after 830 liquidity sweep at in between silver bullet time. Here, yes, at the bottom. Yeah, this where we have the entry.
So here we have a swing low, right? We have a higher low on the left, we have a higher low on the right. Okay. And then we came back, we broke above this high here with impulse, and we created a fair value gap here. If you were to go in a smaller time frame, like 30 seconds, you'd see a clear market structure shift here, or 15 seconds. Okay. So because we know that this is the right time for us, this is the time for us to get an entry after this has been purged. We know this is silver bullets because this is the first fair value gap we got after liquidity has been was purged during this time window, right?
Right.
So this is our silver bullet, and then we also know that there is a macro at 10:50. At 10 to 11, there is a macro. So I'm just gonna make it a solid line. And let me just use this one. We have a macro here at 10:50 to 10 past 11, somewhere here. We will have a reversal, a run on stops in this time window. So if we are bullish, we'll have a reversal, some sort of a reversal during this time window. to take out trailing stops. And because state of delivery has changed here, we now have a bullish market structure or bullish order flow. We know that the market tends to respect these up close candles. So even if it reverses, it must respect the down close candles because these are now our order blocks. Look here. So let's say you missed this silver bullet, right? Because this structure was not so clear for you. You couldn't trust the time frame that we were in to say this is the silver bullet because we took out liquidity and now we formed the fair value gap. Let's say you couldn't get this one. You know, when during this time window, there will be a run on stops. So we have relative equal lows here. And sell side was taken there. We took sell side. And also there was a fair value gap here. So we didn't just come down. We took sell side and we filled this fair value gap, but also there was an order block as our draw. And then we hit that order block. Look how we traded back up inside this fair value gap and we closed above it. So now this becomes an inversion fair value gap. If you know that this is the macro, if you know that this is the macro, you trust to buy when it closes above here, you just buy the open of this candle because you know that we are in a bullish order flow and we are targeting buy side, which was this the low hanging fruit was this high here. This high here. This is a low hanging fruit. Buy side, but also you could take something off inside this fair value gap if you are not sure. If you are scared, you could buy here, take something off here, trail your stop, and then you hold, you target this and also the 830 high, which was also our buy side liquidity, which was where near the new week opening gap, a draw on liquidity. You understand?
Yes.
So this is how we trade the silver bullets, basically. This being our sell side imbalance, price side inefficiency. Sell side imbalance, buy side inefficiency. Unfortunately, we are now running out of time, but I tried to make this short and quick. I don't know if you have any questions that maybe we can tackle, but I would advise you go watch that ICT silver bullet video, and then you'll come back and answer if you have maybe other questions, then we'll take it from there.
Yes, sure. I will go ahead and watch those two videos. One set up for life, you told me, and another one is this silver bullet.
Yes, bro. Yes, bro.
So by tomorrow, let's start trading. So are you guys trading in UK session as well or only US session?
Sorry?
I'm saying, are you guys trading London session as well or you are only trading New York City?
I can't hear you, Ashish. What did you say?
1 second. Maybe my headphone is having any problem. Can you hear me now?
I will look for set up for you during London kill zone. We will look set up for you if you are available to trade between 3 a.m. and 4 a.m.
Yes.
That will be the silver bullet for London.
Yes. So we should only go for silver bullet, or we should go for London and New York kill zone. Like, let's see, London kill zone is 2 to 5. So if we are getting a setup at 2:30, we should go with that, or we should wait for 3 to 4 for silver bullet.
Now remember, there are 3 silver bullets. You have the London
3
and
to 4.
the new, which is from 3 to 4.
You get an entry, a fair value gap from 3 to 4. You get a fair value gap silver bullet entry at 10 to 11 New York AM, and then you also get a silver bullet at 2 to 3 PM session.
No, I understand that. My question is, as ICT told us that London kill zone is 2 to 5. Okay, so if we are seeing that we are getting a liquidity sweep at 2:30 and we get a market structure shift at 2:30 with fair value gaps, so should we take that entry, or we should wait for silver bullet for 3 to 4? That's what I'm asking.
No, you can take it. Silver bullet will just be a continuation of that.
So it means we can look for New York London kill zone plus silver bullet, right?
Yeah, remember London kill zone comprised of silver bullet. So silver bullet is within the London kill zone.
Yes, it's in London kill zone. Yes.
Yeah. So during London kill zone, we might, let's say for instance, we are bullish, we might take out liquidity before 3 a.m. and then create a model to take it up. So there will be that fair value gap that is going to leave for the silver bullet between 3 and 4. So even though you took it down there, then you still have an opportunity to take another trade to scale up your trades during that window period, 3 and 4.
Okay. So I will check those videos and we will start by together. So what plans we have by tomorrow?
No, ours is to look price on daily basis. Even during that London, we will be awake and watching price because we keep on learning.
Okay.
Yeah, so that's what we
So
do.
I'm asked.
So up until we go to sleep.
Okay.
Yeah, we're not like you. You don't have a side hustle.
Right.
Yeah, we don't have a side hustle like you. So ours is charged all day long.
No problem. So I'm trading right now 200K account that is in negative of $6,000. But I have like 14-15 days left to clear it. So I will try to clear it. Let's see if I will be able to clear it or not. Because of all the nonsense and my tension in my life, I lost my 100K funded account.
No, sorry about that, Michelle. Sorry about that.
No
Yeah,
need to be sorry.
let's take
That's my
it easy
mistake.
and try to push that one together. Then see how
Yes.
come.
That.
You don't have to stress too much about what is into your life, man. Otherwise, you're gonna be distracted. Yeah, if it's
Yes.
you rather let us do the analysis for you and you just take those trades.
Yes, I would recommend. I'm asking help from you guys to help me to clear this 200K funded challenge. If I clear this 200K funded challenge, then I will buy 300K funded, or if you will say 100K 2 accounts, and I'll give you guys to trade, bro. So that we can make more money, as you both are more experienced than me.
So how much is 8% of that 200? Is 16.
I need to make 16K profit and I'm in 6K negative. So total I need to make 22,000
2,000.
for first phase.
So
Yeah, for first phase.
with the lot sizes, I mean lot size that you are
Yeah.
employing there, what
Let's
size?
see if I'm trading gold and I'm taking a lot side of 10. So
Yes.
if we get 100 pips, I make $10,000. If with Nasdaq, let's see, I take 10 lot, I take 10 lot and it moves 100 points. So I make 1,000. You understand?
Okay,
It
okay.
is same
Same way
as
you were
Xness.
trading that other one.
It is same as Xness.
All right, bro. No, let's push it tomorrow morning. Let's push it
Yes.
tomorrow morning and then try to clear it.
Okay, I will.
All right, my man.
So I will ping you at London kill zone, okay? And I'll be ready from tomorrow.
All right, my brother. No problem.
Okay, take care. Good night. I'll
Yes,
ping you
but
tomorrow.
for now, before you go to bed, just watch those two videos.
Yes. Yes, after that, yes, after disconnecting this call, I'm going to watch those. Without clearing those videos, I'm not gonna sleep.
Thank you, my brother. Thank you.
Okay, bro. Okay, thank you, bro. Take care.
You too, my man. Tomorrow morning.
Okay, thank you, both my big bros.
Thank you, bye.
Cheers, bro.
Okay, thank you. Take care. Good night.
Good night.